Hola mi gente and welcome back to the channel. My name is Sean and this is We Are Investing. Today's video is all about Docusign, ticker symbol DOCU. We're going to do a stock analysis because right now might be a great time to buy the stock, depending on what the numbers say. The reason why we're going to be talking about the stock is because of the epic fall it just had in the last week. The stock is down 46% in the last 5 days, and 42% of that 46% drop occurred yesterday on Friday after earnings.
No! God, please, no! 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 No!
Now you might be saying to yourself, wow, a 40% drop in one day? There has to be something that fundamentally changed about this company to cause such a catastrophic drop. Well, actually, no. From the earnings report, the company beat top and bottom line. They exceeded expectations, but their guidance that they provided was weaker than expected. And because of that weak guidance that they provided, the stock dropped 40-something%. Was it justified off of that news? In my personal opinion, definitely not. But the stock was trading at a high valuation. And right now what we're seeing in the stock market is that valuation is starting to matter again. So before you enter into any position as a long-term investment, you need to be seriously considering the valuation and doing an analysis like we are doing on this video. That is my top recommendation to you right now. The stock market is falling a ton and you might think it's best not to look at your portfolio. I strongly disagree. Right now is the time that you should be looking at your portfolio. You should be looking at the stock market. You should be buying the dips in companies you believe in, and you should be doing a lot of analysis like this to find out if there's any companies out there that are undervalued based off of financials and fundamentals. And just in case you don't want to stick around and watch the entire video, I'll give you my entry price right now. It's around $110 based off of price to sales multiple valuation that I think is fair. We go over every single number that I'm using in this video, and by the end of the video, you'll have a good understanding of how I came up with this ideal entry price. Now, real quick, before we dive into the analysis and the valuation of Docusign, just know that there is a stellar promotion right now for Webull that if you sign up with Webull and deposit $100, you will get 2 free stocks worth up to $2,300. And if you sign up for crypto trading, you will get an additional $5. This is an exclusive promotion that you have to use the links that I'm providing down below in the video description. Webull is a great brokerage platform. There is no commissions for trading stocks. There are no commissions for trading options. You get access to the stock market starting at 4 a.m. and ending at 8 p.m. You get access to all kinds of charts. You can set alerts. This is a phenomenal brokerage if you're interested in investing or trading in the stock market. All right, let's take a look at Docusign. Let's look at it because the stock has fallen a ton. The stock had a high of around $315. It's currently trading at around $130. And a lot of this drop occurred yesterday when we saw that 42% drop. If we take a look at the 5-minute chart, we can see that tremendous gap down that we had, and there is no sign of a bounce back just yet. I think a lot of traders are going to be interested in Docusign for a dead cat bounce. So do not be surprised if we see some kind of rebound and then it sells off and it heads lower. That is a good possibility here, because as soon as you see a stock drop more than 40% off of non-catastrophic news, a lot of traders are going to see this as an opportunity to get in on a dead cat bounce. Or maybe it completely rebounds. It's hard to say, but we need to do an analysis to come up with a fair value of Docusign if we're interested in opening up a long-term position. Now, even though the stock has dropped a ton, it is still up since pre-pandemic levels. This is February 21st of 2020. The stock was trading around $90 to $100. So we're still above pre-pandemic levels, still some pretty nice gains, but nothing like we had. This was a darling of the pandemic. Now, the guidance that they provided that's dropping this stock isn't horrible either. If you take a look at this, Docusign predicted fourth quarter revenue would come between $557 million and $563 million, while analysts, on the other hand, expected revenue of $573.8 million for the fourth quarter. So they dropped guidance, but they also beat analysts' expectations for the third quarter. Now, maybe there's some sandbagging going on right now with Docusign. Maybe they're coming in low in their guidance to have the stock drop so that they can buy more. That's a possibility, but we don't know if that's the case. Either way, there's a lot of risk here. But if we do the valuation and come up with fair numbers based off of conservative estimates, I think we'll be okay. So here we go. Let's do the analyst. Let's do the valuation. You'll get access to this spreadsheet if you join the Patreon. The ticker symbol is DOCU. The shares outstanding is 197 million, and the market cap is $49 billion right now for this stock. If we take a look at the data, the historic data of this company based off of the financials, we can see what their revenue growth was. In 2017, it was $381 million. 2018, 519, 2019, 701, 2020, 974, and in 2021, $1.4 billion. We're looking at around 35 to 50% year over year growth in revenue. If we take a look at the quarterly revenue growth, quarter over quarter, what are we looking at? Well, we had 15% growth and then we were kind of dropping down. And now we're looking at around 6% quarter over quarter growth in revenue. Net income, this company is not profitable. It hasn't been profitable. It is getting close to being profitable, but it's not a profitable business. So that's something to consider as well in our analysis. Now, based on the company's guidance and what they're doing, this fiscal year for 2021, after we get the fourth quarter results, should come in with revenue just above $2 billion, which would correspond to just slightly above 40% in year over year growth, which is really good. But if they are saying that the forecast is a little bit weaker than expected, then we can be conservative in our approach and we can drop revenue by 11% for the following year, 30% year over year growth to give you a total revenue for the fiscal year of 2022 of $2.66 billion. This is the number that is going to be very important in our analysis, because we're going to be looking at forward-looking price to sales multiples, because this is a growth stock that is not profitable. So the price to sales multiple is the best way to analyze Docusign, in my personal opinion. So if you expect revenue to be 25% year over year growth, then that's going to change your numbers. But honestly, given the consideration and given how this company has been growing before at 36, 35, 38, 49%, and then 41% for this year, I think 30% is actually quite conservative. So I'm comfortable using this number, and I think it's actually going to get me in the lower end and provide a little bit of a factor of safety in my entry price. All right, let's get into the soup and nuts of this valuation to actually come up with our price targets. Now, I'm using a price to sales multiple of 10, considering the growth and considering the history of the price to sales multiples for this company. I have it over here on the right. You can look at the data for each quarter, 11.83, 10, 12. And then the pandemic hit, and we're seeing price to sales multiples of 33, 28. Those are huge numbers, and that's why you're seeing such a big drop based off of just a slight revision to guidance. So if we believe that a price to sales multiple forward-looking of 10 is fair for a company that is growing revenues anywhere between 30 to 40%, then we can come up with a price target. And the price target is going to be $135.20. That price target is where you would actually be selling the stock, because at that point, the price to sales multiple is 10, and that's where you think it's at fair value. So you would probably be selling your position. We need to add in a required rate of return. Now, if you hold this stock for a year, how much percentage do you want to get out of that position? Do you want 10% gains, 20% gains? Do you want something higher? I like 20% gains because I think it adds a little bit of a factor of safety, because the market typically does not move 20% in one given year. But if you do get a 20% gain in 1 year, that's a nice little chunk. Stocks can obviously be flat for a year, or they can move way higher. This is your personal opinion on what your required rate of return is for a given stock. But given that a price to sales multiple of 10 will give us a target of $135.20, this is based off of the company not diluting, not increasing the shares outstanding, and a required rate of return of 20%, then our entry price is $108.16. That means that this stock still needs to fall an additional 19.94%. And at that price, the market cap of this company would be $26 billion. Now, that's what I personally believe is a good entry price. But you don't just enter into any stock for a long-term investment. And to be completely honest, there are a ton of opportunities out there, some that might be a little bit better than Docusign. Now, me personally, depending on when this stock hits that price and what other opportunities are out there, I might pass on Docusign. I'm not exactly sure yet, but I'm not jumping out of my seat to buy the stock right now at the current price. I have my concern with the company. It's not yet profitable. It doesn't really have a large moat, but I definitely think the product will continue to sell unless a competitor completely wipes them out. So there are some good things and some bad things. We weighed in some of the risk with our entry price, and I think it's a fair price to buy the stock at, and you will get a nice return, but there might be better opportunities out there. So I'll let you guys know if I buy the stock, when I buy it. I'll let you all know maybe on another video, or if you're part of the Patreon and in the Discord server, you will definitely know there. But with all that being said, it's been real, it's been fun, it's been real fun. And this is We Are Investing, and together we are invincible. See ya!